Good morning and welcome to Direct from the Desk. My name's James Gerrish, Portfolio Manager at Shaw and Partners and the author of Market Matters. This morning, Friday morning, it is the 15th of May. It's about 6:45 in the morning. I'm just writing the Market Matters morning report. It's actually a bit of a struggle this morning. So just on the topic we're writing about, looking at Australian tourism, etc. But before I get to that, I just want to focus on I guess our bigger picture views around the market and a couple of the stock specific or sector specific views that we've written about this week. So in terms of the market itself, it's actually a pretty bullish night over in the US market. So the Dow Jones has rallied around 800 points from the lows to close near the session highs. So that's a really positive turnaround over in the US markets. We look at different areas of the US market to get a gauge on risk appetite, etc. So the Russell 2000 has pulled back around 14% in this decline, has hit our target on the downside and has now bounced pretty strongly. The S&P 500 has done very similar as well. So if you think about US stocks, the sectors that have been weakest over there have been the banking stocks this week as well as the energy shares. So they've bounced pretty hard overnight. So Wells Fargo was up more than 6%, JP Morgan was up really strongly. So the energy stocks were buoyed from a pretty strong rally in the crude market overnight. So those areas that have been hit hardest have rallied the hardest today, and the market staged probably a really impressive turnaround. So we've had this, we've had the big rally off the March lows, we've had consolidation, the market's pulled back, and I think now the market is ready to go and make new highs of this advance in the not too distant future. So in the short term, we're bullish on stocks. If you pull that back to what's happening in the local market, we've had a market this week which has oscillated between a high of 54.89 on the ASX 200 and a low of 53.01. So it's about a 180 point range on our market. Selling has been bought into, buyers have been sold into, etc. That old thematic of buy weakness, sell strength that we've been writing about. But there hasn't been a huge range play out. It's been a pretty tight range in our local market. Despite all the negativity around economic data, we know the economic data is going to be dire. So that's the case in the US market. We've actually seen a lot of commentators out globally talking about how this stock rally doesn't make sense, etc. And what we've been writing about is the liquidity-driven nature of the rally. I understand that earnings are a major concern, and I've got concerns around earnings. We're not sitting in this market with the rose-coloured glasses, but equally so, I think that the liquidity that we're seeing, the fact that the market is really bearish, I think is a bullish indicator. So, there's a lot of commentators out there calling the market to trade lower. They've raised cash levels, and I think the direction of most pain in this market could well be up, and I think that's probably started overnight in the US with a pretty significant turnaround in the major indices over there, led by those stocks, those sectors that have really struggled, so the banks and energy in the past couple of weeks. Turning on to our market, a few things I wanted to get you across this morning. So CBA gave a trading update this week to round out the bank sort of reporting season. If you think about the banks and the bad debt charges they're taking on as a consequence of COVID-19, you've got Westpac, which has taken a $1.6 billion charge, CBA at 1.5, you've got ANZ at $1 billion, and then NAB around just a shade over 800 million. So CBA remains well capitalised given asset sales. Their tier 1 capital is slightly lower than I had envisaged, so that's going to have a negative impact on the second half dividend potentially. So I think the second half dividend for CBA will be closer to $1 than $2. Westpac has of course deferred their first half dividend, the decision on their first half dividend. I think it's now probably unlikely that they will pay a first half dividend unless they see a significantly better outcome from as things go back to work post COVID-19, or as we work through this COVID-19 situation. ANZ, $1 billion, that's probably under provisioned, and NAB is probably under provisioned, but they have raised equity, so $3.5 billion worth of equity, and their tier 1's pretty high, so NAB's probably under provisioned. But the capital raise is obviously important. We had Xero out yesterday, and this is the accounting software business that we own in the Platinum portfolio. We like that business. We bought it into the sell-off in March. So they came out with subscriber numbers that were really strong in my view. So it's 467,000 new subscribers added in the year. Takes the total subscriber numbers just shy of 2.3 million. This is a growth business. They're investing in growth. There was some negative rhetoric coming out after the result yesterday. I don't think that is overly warranted. I think the stock price is full at these current levels. So I'm not adding to our position at this stage. But if it was to pull back another few dollars, then I would be adding to our position. So overall, I was positive on the outcome of the result. I'm positive the medium-term trajectory of Xero. It's just around price. So we own it from lower levels. If it drops a couple of dollars, we'd probably add to our position in Xero. The other stock that caught my eye this week was GrainCorp. So they came out with their full year numbers that were that were strongly ahead of market expectations. So this is a really hard business to get your head around in terms of predicting their earnings. However, it's a business that if you do work, it's very cyclical, and the upswings can be pretty solid in GrainCorp. So that's a stock that's back on our radar after a pretty good full year result, I should say, out this week. We wrote about Alumina this week. So AWC is a commodity company that's obviously been under a significant amount of pressure in recent times. The stock has been hit obviously on the back of commodity price weakness associated with that business. But one of the interesting things was it was added to a while ago. It was added to a large ETF, an income-focused ETF. That has now been rebalanced. They're removing that AWC out of that income ETF, and that attracts a fair amount of selling on the market. I think that played out on the 13th of May, so a couple of days ago. So there was 134 million shares I hear coming out of that ETF, so that's put pressure on the stock, and I think that sets up a reasonable buying opportunity. So we may start to accumulate some AWC around these current levels, leaving some ammunition to buy into new lows. If we have the view that the market is now going to go and rally from here, so that's obviously not the consensus view. The economic data has been dire. The commentary coming out of a lot in the market, particularly over in the US, is pretty dire. So some well-known investors, but who are very much negative in the market. I just simply feel that people are looking for a correction in this market. Fund managers I know are sitting on high cash balances. So the market often moves in the direction of most pain. At this point in time, I think the market, the most pain is on the upside. So if we've got that view, then we want to add to a few of the market link plays potentially across the portfolio. So financials will do well today. Macquarie's a market link play, so it makes sense to consider adding to our Macquarie position in the Platinum portfolio. We're slightly down on the position at the moment, but adding to Macquarie I think makes sense at this current point in time. Anyway, it's going to be a reasonable open on the ASX today. As I said before, there was a reasonable turnaround in US markets overnight. The Dow rallied 800 points from the lows. The beaten up sectors, the financials, the energy space was the biggest mover in the US market overnight. So I hope you have a good Friday trading session. I hope you have a wonderful weekend. I'll speak to you again soon. Bye for now.